Hello everyone, today I would like to talk about the importance of financial health. Recently, I saw some news from China saying the largest city in China with 25 million people underwent a more than 6 days of lockdown. During the lockdown, most places, including stores and workplaces, were closed, and people could not get out of their apartment or go to work. A lot of small businesses were closed forever due to the lockdown because of a financial and supply chain disruption. Numerous people lost their jobs if their jobs can only be done in person. As a result, some people could be struggling with paying for their mortgage or rent, or at the verge of going bankruptcy. They might have debt default. The news was devastating, but it really gave us a warning of how important being financially healthy it could be. In my opinion, this is an area people pay less attention to than what I think we should do. And when crises like this happen, people could suffer from consequences that is larger than what we would like to deal with. Let's start by asking some questions. Do you have emergency fund? Is your net worth negative or positive? Do you have enough insurance coverage? Have you ever thought about your investment portfolio? A person's net worth is a good representation of the total monetary resources at someone's disposal and is an indicator of a person's financial health. Typical signs of strong financial health include a positive net worth, a steady flow of income, controllable expenses, good investment return, and a cash balance that is growing and on track to continue to grow. Every one of us has a budget, which is the total amount of money we can spend. A healthy and sustainable budget should follow the 50-30-20 rule. This means the fixed expenditure or necessities from your family should not exceed 50% of your after-tax income. Those could include your monthly mortgage or rent payment, your health insurance payment, your utility bills, as well as the grocery cost for the whole family. The flexible expense should not exceed more than 30% of your total income. This should cover anything that does not fall into the fixed expense bucket. It could mean the expense to go shopping, go dining in a restaurant, or go traveling. The rest of the 20% of your income should go to your savings account. If you have a monthly saving of almost zero every month, you may want to challenge yourself on where did my money go? Did you spend too much on things you would like to have but not necessarily need? As your savings continue to grow, the first thing I recommend you to do is to set aside 3 to 6 months of emergency fund based on your potential financial risk. If you are a small business owner or in a more volatile business under the COVID situation, I suggest you to set aside 6 months of rainy day money. While on the other hand, if you have dual bread earners, 3 months of emergency fund could be sufficient for your family. The rest of your savings can go to your investment. Carefully think about your investment portfolio. Ask yourselves questions like, am I an aggressive or conservative investor? What is the market volatility now? Which do I like to invest first? Is it the property or is it stock or bonds? What is my risk tolerance level? Understanding those questions can help you better decide an investment strategy that works for yourself. The bottom line is try to diversify your portfolio and do not put all the eggs in the same basket. The status of the financial health is not static. It could change with your income, your expenses, your investment strategy, and rate of return. Regularly checking your financial status and make things under control is one of the best ways to face the future uncertainty and risks. None of us can completely avoid the financial risks, but this will put us in a better situation and try to minimize the consequences of the risk. That's all I want to say today. Thank you very much. I do hope everybody can manage their financial situation well and make better preparations for the future. Thank you very much for watching.